Awesome. All right. Well, today we have Rob and Aaron, and they are responsible or heading the Madera Industrial Project. And so I just want to thank you guys for this quick Q&A session. I think the intent of the session is that, we do have some investors here that are interested, and they really wanted to get more of an up-to-date progress of see where we are in terms of, we broke ground I think a few weeks ago. And so just if both of you, first of all, maybe share a little bit about your company and what you do and your specialty, your experience in the warehouse industry. And then we can then transition into the project, the Madera Industrial Project in itself. And then if you can touch on some of the financials, and then we'll just close it out with just, general Q&A session from anybody on our panel. And I have a couple of questions for you guys as well. So I don't know, Rob or Aaron, whoever wants to take the lead here. So
Rob, go ahead. I
Yeah.
can go over the project in a minute.
Sorry, I just lost you guys for a second there, but loud and clear now. Yeah, thank you, Shelley. I appreciate the time, and thank you, Aaron, for joining us. The Warehouse Partners is developing 144,000 square feet of light industrial multi-tenant warehouse, and we're developing it in Madera, California, which has a 0.04 industrial vacancy. Over the last decade, you struggle to find anybody that has more experience in light industrial, asset management, property management, leasing, investment sales, you name it, than the Warehouse Partners team. And that Warehouse Partners team is made up of asset class specialists. Our design build contractors has constructed millions of square feet. I myself, Rob Boyce, have been in commercial real estate my whole life. My family's developed multi-tenant office and laboratory space on the East Coast. And so this is a natural progression of understanding the asset class, having done it for so many years, developing in a space where it's severely underdeveloped. There's nothing available really in Central California. And this asset class does particularly well in open spaces, and particularly in the California Central Valley. I'll give Erin an opportunity to introduce herself and her opportunity and how we began to work together and her understanding of light industrial. Erin?
Yes. Hi, my name is Erin Volpe. I am the COO of Warehouse Partners. And my background is essentially, I come from a military family, so I've moved all over, and I've landed in the Central Valley due to my husband. And when I came here, I didn't know what warehouse was. I didn't know what warehouse properties were at all. And then through working with Rob for the last almost 10 years, I've learned the ins and outs of industrial warehouse, from everything from literally calling the plumber to help fix the bathroom, to doing complicated leases and acquisitions, dispositions, handling the development process to this point with our contractor. And, as Rob said, when people think of light industrial warehouse in the Central Valley, we're the ones that get the call. And so we feel very strongly that this product is very needed in this marketplace, and as well as multiple marketplaces throughout the US. And we have a very high sense of confidence that the demand level for these 74 units that we're going to be delivering to market in the summer of 2022, which is in 4 days, something like that. So almost this year, is going to be absorbed very, very quickly at competitive rates, because nothing has been delivered to market of this asset class in the last 30, 40 years, especially in Madera. As Rob said, the vacancy factor is less than 1%, which is almost, it sounds unheard of, but for this light industrial space, it's probably even less than that, just because there's nothing on the market, and that that vacancy percentage really is probably closer to the larger units, the 30,000, 40,000, 50,000 square foot single tenant users, which is not the focus of this project. We're focused on the small businesses, the businesses that need space in multiple marketplaces, a smaller footprint. And so we balance that difference for the tenants that need to support those really large distribution centers and single tenant users.
That's awesome. That's awesome because I think a lot of time when I come from the multifamily space. So when we think of tenant, I think of like an apartment, I think of all these tenants. And oftentimes when we think of warehouse, just the term warehouse, we're thinking of Amazon warehouse, right? But really, there are so many businesses, smaller businesses that support the operations of these larger businesses, chains that are in our Central Valley. And I think that sounds to me like that's your target market, is you're trying to capture these smaller supporting businesses in the supply chain or whatever area it may be. So
absolutely. You're absolutely correct. And then I would also note that just because they're smaller businesses doesn't mean they're less established. Every business has its own requirements, right? And so these smaller units, each unit is 1,950 square feet with the ability to take on multiple units if a tenant needs a little bit larger of a footprint. Those increments of basically 2,000 square foot is the range in which the tenants can add on units. But they do serve that marketplace. They serve the bigger logistics centers, and it very much is. And they also serve the building market as well. The home building and the agriculture that you can find in the Central Valley. All of those specialty niches is really where these tenants come from. And then you hit it on the nose with multifamily. This industrial asset class is the multifamily of the industrial. So it's the smaller tenants, right? It's shorter leases. It's more typically more turnover. But when these businesses find a space that they like and that they thrive in and that they feel supported by the management and it's operated successfully, they tend to not leave. We had a question the other day from someone that asked, how long do tenants typically stay? And said, well, they could stay anywhere from 3 years to 50 years. You never really know, as long as they're getting what they need from the space, because businesses change so quickly. But the model is very similar and very akin to the multifamily arena.
Okay. So, that leads me to, actually a couple of the questions that I have. And, with my background in business, one of the things that I'm always asking about is trying to figure out how to qualify that tenant, because the success of that project is really dependent upon the lease and the tenants that are in those that facility, those warehouse. So share with us a little bit of some of the tenants that that you have in mind that would meet that criteria, that would be that would lease the space. So maybe just kind of go into a little bit more specific, like who will we be expecting to be leasing a 1950 square foot industrial building in Madera? Like,
absolutely. So there's going to be a wide range of businesses. You're going to have contractors, electricians, maintenance providers, security companies, HVAC vendors, personal and professional storage. The pandemic hit a lot of different real estate arenas really hard. But one of the ones that was not really hit that hard was industrial. And that's due to all the changing factors in the world, but, more online shopping and more delivery and people building more during the pandemic and running out of all of the commodities. But also larger offices and retail centers that had to close or didn't renew their leases. So they had to store all of that office equipment somewhere.
Yes.
So this type of space is perfect for a business that needed to close its doors temporarily or sent everyone to remote work. Light manufacturing is one of the uses, and all your skilled trade services. And then the other portion that I touched on lightly is the e-commerce warehousing, last mile delivery. So there's actually an Amazon distribution center that's just started to be constructed in Madera, which is going to mean that the last mile delivery services is really going to, I would see it coming to our site in Madera, because we have a depressed truck wow. So we have a loading dock, essentially a shared loading dock that any tenant is able to use at no additional cost. And so that's going to be a highlight to drive a lot of those tenants to the site. So, the big Amazon truck doesn't deliver everything to your house. They come in those little white vans. And so the white vans need to pick up the product somewhere, unload and pick up the product. And that's what that last mile delivery is.
Got it. Interesting. Very, very interesting. I just wanted to, reiterate what you said that, really hit the spot for me is, as people are with this pandemic and people are shifting towards working remotely, they have to find a place to put their stuff, right? Maybe they're moving away from their larger facility, office, or whatever it is. They need something to house their equipment while their, employees are working from home. And I didn't even think about that. So yeah, thank you for sharing that. That really helps me understand the type of tenants that we should be looking for or we should be expecting. Now, do you have any leases on hand already? Are you working in the middle? I mean, share with us a little bit of that process.
So where the project is right now is it's dirt. So we have broken ground at the end of November, and we're fighting a little bit of the rain right now to get the grading completed, but we're still on track. We've accounted for a little bit of rain, so we'd really love it to stop for a little bit right now, just to dry out. But no, we're on track and we're broken ground. But these type of tenants, similar to multifamily, again, aren't going to be, they don't actively look for spaces until probably about 6 months at the earliest prior to moving. And it's because they aren't large 60,000 square foot complicated 30-year leases with triple nets and billbacks and all of that. These are very simple leases. And so the lead time is a lot less. However, I would caveat that by saying we have a sign out there. And we've already had multiple inquiries on leasing and interest from the community. During our groundbreaking ceremony, we had a number of members of the community and the city council and the mayor's office and city employees all out there. And they all were asking, well, how do I rent a space for my side business? So that was encouraging to see. But all of them really feel that it's going to be absorbed very fast. But like I said, we have a list probably about just in the last month, including the holidays, we have about 10 people already on a wait list for leasing information once it's available. And we do expect to be about 25%, at least 25% pre-leased by August of next year.
Got it. So are we thinking by summer the full 74 units would be available, or is the build out going to continue through to the end of the year?
So the plan right now is that there's 4 buildings and they're all going to get certificate of occupancy at the end of the summer of next year.
Oh, got it. Wow. That's
so great. Depending on timeline, and finishes, we may do one at a time, but that's not currently the plan. Mm-hmm. So if we do that at the same time, those 25% pre-leasing is one of the buildings. So we'd still be able to get all of them in by the end of the summer.
Got it. Okay. Awesome. So share with us a little bit about the financials. Maybe we can transition to the financials and returns, equity multiple, give us a little bit of a overview of the financials and what we would expect as an investor, and maybe looking at it from the approach of, if an investor had $100,000 that they were putting in, what would they be expecting at the are we doing any quarterly payouts? Are we what will we be expecting in terms of our IRR? And what is I know you broke ground, so in the documents, I think we were initially planning on 24 months, but has that time frame changed?
Yeah. So I'll start with that. So the time frame, per the documents for the private placement memorandum and everything, it says 30 months is our estimated, but that 30 months started in May. So it's been a few months now since that timeline started. So we're looking at about 24 months left in the project. And in that time, we expect returns. And I would caveat all this by saying that our estimates are very conservative. Our costs that are built in, our operational expenses, our vacancy factor, they're all very, very conservative. So we have 85 cents per square foot per month is what the rents we assume to take are. But we do plan to push that as we start to fill up, and the demand is still there. So we're going to monitor that closely and see how quickly, you know, it gets absorbed, and see how much we can push that. And that's with the expectation of 3% annual increases on the rents.
Okay.
So these are modified gross leases, which means that the tenant doesn't get a lot of billbacks, because, like we said, it's very simple leases. Rob and I have done over 1,000 leases in the past 5 years of just of this type of property. So we've put together a lot of them, and we really have a game plan of how best to operate the property in terms of leases. So for returns, what we're looking at for that 24 months is the expectation that there's not going to be many distributions, if any, until the exit, because the property needs to stabilize and start to take on that debt service for the construction loan, which is 24 months. So it shouldn't be, there isn't going to be any issue in operating that. But if we stabilize early, you know, there will be monthly distributions, and that's any excess cash flow. So the expectation is not until exit, but there may be some additional, we'll call them bonus distributions earlier in the process. And what we have set up is a 10% preferred return for the investors. So the first 10%, that's accrued annually for those 2 years. And so that, after your money is paid back, your original investment is paid back, you get that 10% preferred return. And then it splits 60% of all of the profit to the investor and 40% to the general partner. Right now, we're estimating about an equity multiple of a 1.6 for the project itself, which is closer to a 1.5 for the actual investor return. So if you put in $100,000, then approximately the expectation of return is going to be about $50,000 on top of the return of your money. So super simple. You're gonna 1.5 times your money is essentially what we're aiming towards, and that is about a 25.4% IRR for that 24 months.
Yeah, that definitely makes a lot of sense.
Did I miss anything there, Rob?
No, I think that was a pretty efficient explanation. Yeah, I'd like to say that we're conservative in our estimates. You know, we always want to try to be as realistic or conservative in any of our estimations, whether that's in leasing or construction, and in particular investor returns. And if we over deliver, then terrific. But we want to make sure that we're in the realm of possibilities. And you know, if we exceed those expectations, then that's a win-win for us, and in particular our investors, of course.
What would you
Also,
go ahead and finish, Rob. I'm sorry.
Sorry, Michelle, I wanted to add that a lot of our investors have a lot of experience in multifamily, and at times those multifamily investors sometimes understand the nature of the tenants and the leasing sometimes better than someone who invests in maybe a single tenant industrial project. And so just like multifamily, when we talk about pre-leasing and the estimates, and we're conservative there as well, and how that's built into the returns. You know, multifamily, the leasing really starts in a multifamily development or any type of development, but in particular, multi-tenant industrial and multifamily, when it starts to look like a completed project. And then that's really where the interest lies, is where people see that it's actually real, and it's closer to looking like it's finished. Then leasing starts to pick up at pace. And then your multifamily investors also understand the nature of the short leases are at times a benefit, because you can increase your lease rate for good tenants that renew, and then you can replace certain tenants for whatever reason with superior tenants on better lease rates. So at times, apartment or multifamily investors can come to understand multi-tenant industrial really quickly.
Yes, you're exactly right. That's how I perceive it, is really looking at it from like a multifamily, but it's just you're housing businesses. So that's
Just a
why
few less bedrooms.
yes, yes, and which is awesome. I think you know, I have a business background. I own a lot of small businesses, so which is awesome because I think that that's definitely a big need that, you know, isn't fulfilled locally here. So I was going to transition and ask a little bit about your exit strategy and what do you have in mind? What's your timeline? And you know, what's plan A and plan B? Because I know with every you know, syndicator out there, you got a B, C, and D, you know, so maybe share a little bit with us what your plan A and plan B, and what do we expect to see in the next 24 months?
Sure. And so when we conceived the project, we saw this as a development project with an exit at a potential 5.5% cap rate, 5.5 cap exit. And that exit can be achieved through either a sale of the property
Mhm.
once stabilized at that 5.5 cap rate. But we've had, you know, multiple exit scenarios. Like you said, Shelley, you always want to make sure that you don't have all of your eggs in one basket, and then you have multiple ways to cover your bases for yourself and your investors. And so, you know, there's scenarios where we can refinance the project and uh, perhaps exchange investors who would want to stay in because we're investors ourselves, and we could do an upreit. We could do a 721 upreit and keep the project on a long-term basis. But I do want to mention for us on this call and for investors, the current strategy, the A strategy is an exit 24 months from now when the project is stabilized. But we're always looking forward. And so if the market dictates that somebody wants to pay something in the four caps, obviously that's what we'll do.
Mhm.
And if warehouse partners purchases the asset through either a sale or refinance, and exits those investors at, you know, a 1.5 equity multiple. That's one particular exit. So we have multiple exit strategies, of course, but I would envision currently that it would be either a refinance or a sale of the property. But we would always like to think about, you know, our investors, and we've had a lot of feedback for investors who would want to stay in. So we do have multiple exit strategies, but for right now, I would say that the plan is to exit the investment at 24 months from now and deliver that 1.5 equity multiple for the investors, whether that's through a refinance or a sale on the market or a or sale to an affiliate of warehouse partners.
Got it.
I would also just note on there as well, if we were to do one of the more longer term holds, our intention would be to give each investor the opportunity to exit if they wish at that time. That way they're not stuck in an investment for longer if the group wants to stay longer. So that is something that is a priority for us as well. But as Rob said, that's not the current exit plan. And then if anything had to do with an affiliate or a sale of any kind, multiple third-party appraisals will be done to make sure that the fiduciary duty is to the investors.
So
Yeah, that's exactly right.
in summary, basically all investors will have the option to exit in 24 months, whether it's through a refi or sell. They will have the option to exit. They may also be given the option to stay should they choose to stay, and whether that is, you know, going into another investment group or continuing with the refi or whatever that may look like. But what to me as an investor, it just tells me that I have a lot of options. And so should the investment go well and I decide to continue as an investor, then I have the option to do that. Or should I have an opportunity knocking on my door in 24 months, I have the option to exit as well.
That's right.
Absolutely.
And that's really, we're going to do what's best for the investors, and those multiple exit strategies do give our investors the option. But Aaron is completely correct, is that, because of our commitments, and Shell, you hit it right on the head, they do have the option to exit on month 24, so they won't be stuck in an investment. And then I just one footnote: the 24 months from now is plus or minus, some months, right? So we're not stuck in any hard coded, we must sell on month 24 when month 25 is beneficial, or month 23 might be beneficial. So just a note for yourself and investors is that we do have flexibility. So if the opportunity presents itself to do much better, then we will take that opportunity depending on the timeline that the deal dictates.
Got it. Yeah, and that's the nature of the game for all the investors. And in terms of commitment, we often generally say 24 months or 18 months or 5 years. But I've had deals that were 5 years that are now becoming 2-year projects. And so I mean it's a win-win situation. But it's great for investors. The shorter the time frame, the better. But I often understand that some investments that are very good, you want to stay in and be part of that long-term plan. So I'm excited that I think that you have that option, because there are folks out there that are just seeking that cash flow. So that monthly distribution, quarterly distribution. So I think that it seems to work well. I know I have a couple of other folks on the call. If you guys have a question, feel free to unmute yourself. I'm running down my questions and the questions that I have, but
I have a quick question.
Go for it, Lori.
Lori. Can you tell me more about the current loan and what relationship you have with the lender? Are there prepayment penalties if you wanted to refi before 2 years or up? Tell me a little bit more about the loan situation.
Yeah, so we have a $13 million construction loan with a private lender, and the loan closed in the middle of November. They've been really great to work with. There is no prepayment penalty. It's a 7.25% interest rate for that construction loan. And Rob can elaborate more, but I would say that that was acquired during the middle of the pandemic. And so it seems on the higher end for interest rate when you compare it to, your bank financing right now that you've seen. But during the pandemic for a construction project, we're very happy with that rate. And we sourced it through George Smith Partners, who did a very good job for us to obtain that kind of financing for us. But there is no prepayment penalty. It's interest only for the course of the construction, for the course of that 24 months, and construction and stabilization. So we really lucked out with that.
Yeah, super question. Thank you, Laura. Yeah, we're really happy with the loan. We do have the opportunity to refinance it once the project is done with construction after 12 months. And like Aaron said, we are really happy with the lender. They've been good to work with. But I think whether it's in the pandemic or post-pandemic, for an industrial construction loan, for this type of development in this type of market, I think it's really good financing. And I think the Warehouse Partners team and George Smith Partners, who some of you may or may not know on the call, is one of the largest private lending brokerage services. This may be the smallest deal they would have done in the entire year. But we have a really good relationship going back a number of years with one of the principals. And so through that relationship, we were able to get this loan at a time where I think other people may have struggled to get a loan. I think it's partly due to our experience in the asset class and our background in operational excellence in multi-tenant light industrial, that was able to reassure the lender. Aaron had mentioned the number of leases that we have signed between the two of us and renewals, and the number of years of experience. So all in, you could probably shave a point or maybe half a point off now, but perhaps. But I think all in, it's superior financing for this type of project.
And I would also say that was non-recourse.
Okay.
Yes, very important.
Can Rob and Aaron, can you talk a little bit about your capital stack? Like how much is the loan? How much funds are you bringing in as just private investment?
Yes, so the loan is 13 million
Mhm.
and the equity is about 5.6 roughly, is for a total equity stack or a capital stack, excuse me, about 18 and a half, 18.6.
This is Lori again. So I have some investors that are clients of mine, and right now they've kind of fully invested for 2021. So they don't really have funds available right this second. Is there an opportunity for them to invest in something like this in the future? Whether that be an extended funding period or, maybe on the next round, if you do do you have plans to do projects in the future?
That's an excellent question, Lori. Thank you. So for this particular project, we have a limited window for equity, and I can go into some detail as to why there's some equity available. We had a large investor who is actually a family friend of mine, who really liked and understood the project, and he was going to invest more than $1 million into the project. But such is the world in the post-pandemic, that he received an excellent opportunity. He's in the senior healthcare business, to invest in his own business, to partner with somebody in a sort of a unique situation, given the landscape that we're in, particularly in senior care and senior housing. So that's what created the opportunity for additional equity into our project. Otherwise, this project probably would have been closed some months ago. To close our equity commitments on December 29th at 5 p.m. Now, Lori, if you had somebody and they were interested in the project and they were looking to invest, I would say the answer is it depends slightly. It depends on if we've raised all the equity already on December 29th at 5 p.m. We have some strategies to fill the equity and close the investment at that date. But if they were willing to put a commitment in, there is some flexibility depending on the investor, and depending on their timing for funding. We couldn't go into something like February or something like that. But if it was a matter of arranging their funds and they weren't able to do it on December 29th at 5 p.m., we would be looking to take a commitment and work with them on a reasonable timeline to get the money in. We're looking to close out the investment, but we also understand that it's the holidays. And so things get kind of busy, and family and arranging equity at right before New Year's is difficult for everybody. And so we're reasonable, and we're human in that respect. So I would say if they're interested, we would need to have a good conversation.
Yeah, and just to elaborate on that, if they're looking for that 2022 investment date, they wouldn't necessarily need to fund in 2021. So if that is the the problem, the actual date, we could discuss something about funding the first
Okay.
couple weeks of January.
Okay, thank you. And then,
And then you also mentioned about the additional projects. Rob, did you want to talk about that?
Yeah, and so we'll have more multi-tenant industrial projects coming up. Aaron and I are working on subsequent projects right now. And so for everybody on this call, and if you've taken a look at Madera, and you like what you see, our objective is to build projects that look and feel like Madera in other municipalities, and make it as close as possible. Every municipality is going to want certain things, but we'll definitely have other opportunities coming up shortly. We don't know what the particulars of those projects and the returns look like just yet. But I will say is that, the all in, we're very happy with the way Madera has progressed. I don't know if we had mentioned on our project call so far is what a deal we got on the land. Aaron, do you want to talk about our acquisition price and what market is right now?
Yeah, so we were actually able to acquire the land for about 50% below market. And we had an extended escrow period so that we were able to do all of the entitlements prior to closing. And so we closed the same week we got approved for our entitlements. And one of the reasons we were able to do that is it was a parcel that's been on the market and off the market and on the market and off the market for many, many years. It's been generationally passed down in this family that we purchased it from. And we hit them at a very good time where they needed to make some personal decisions in order to let go of the land. And also the parcel, it has some items on it that other persons who were interested in it previously weren't able to overcome. So there is a high pressure gas line that kind of goes diagonally across the dog ear of the site, and for a large distribution center, that won't work because you can't build on top of it. But for a center like ours, where you have the buildings a little bit more spaced out and you have parking in between, we were able to design the site plan very efficiently around it. And so we were able to overcome that, and which really helped us bring down that price. So we're very, very happy about that. I think right now, Madera land is going for closer to 115 bucks a foot, and we purchased this land for about 51 bucks a foot, 51,000, excuse me.
For this project, and if people are interested in, say, maybe looking at this project versus a future project that we're looking to do, a lot of the risk has been taken out of the project in terms of the entitlement process and permitting, land acquisition. We own the land, obviously now. The loan is in place. And so we've closed on a number of items that an investor might think, these are risks that I'm willing to weigh in terms of this investment, like any investment, right? We're looking at risk reward, and we're trying to balance, trying to manage our risk and get good returns. At this point in this investment, a lot of those hurdles have already been cleared. And not to oversimplify the project is that, now we're just under construction, and then we'll be looking at our pre-leasing, and then we'll be looking at completion and stabilization and refinance. And then we'll be looking at our exit. So a lot of the question marks that most investors would have, or things that they might consider, well, I hope this goes well, or I hope we meet our timelines. We've already overcome all of those things. And so it's about doing the project and delivering good returns at this point.
Thank you, Rob and Aaron. I mean, this has been so informational. I think that, as an investor, and also I work with so many syndicators, that the key to any investment is to be able to manage the risk well. And I think just hearing the that your first step in acquiring the land at, such a great deal is already putting in so much equity into the project itself. And so I just wanted to emphasize that because I think, that is, always something that I look for when I'm going into some type of a development deal is, what is the cost to acquire the land and the entitlements involved. Do we have any other questions from any of our folks out there? I know we are like running right into the hour. We've got about 12 minutes left, and I know it's on a Christmas week, and I would love to everyone to have some time with their family too. So do we have any other questions from anybody else on the call? And Lori, thank you for those great questions. So
Yeah. Thanks for putting up with the questions and answering them. You did a good job. I guess the final question would be, would you be open to an investment of less than 100,000 since it's such a short time to invest, short deadline?
Yeah, that's a great question. Aaron, do you want to tackle the investment minimum?
Yeah, so right now the investment minimum is 100,000. I think that for investments less than 100,000, it would really need to be a discussion and making sure that the investor is obviously meets all of the accreditation hurdles, which I don't think is going to be an issue with any of your guys' group, because I know we talked to Shelly about that. But the only issue that we see is that we have about $1 million left in our raise, and we have two persons who are looking at larger chunks of that. And so we want to make sure that the leftover isn't an awkward check size. And that's kind of our only hesitation. Obviously, we'd love to have the investment closed out as soon as possible if that comes in littler chunks or bigger chunks. But it's that leftover piece that if we can't fill it, that's the issue. So
I understand.
Our
and I have
intent
no
would be
problem
100.
Okay, I have no problem if you put the bigger investors first. I get that. I just happen to be pretty much fully invested in other things. I have a small amount, I could do 50. I can't do 100 right now. If it were 3 months from now, might be a different answer. But right now, given the short timeline, I'm looking at maybe potentially a smaller amount. But if you guys fill it up, then fill it up. Good for you.
No, we definitely appreciate that. And I think that if you want to maybe shoot us an email, and we can just keep you updated in the next couple of weeks on where our raise is. And if there's that room left, then we'd absolutely love to have you in the investment.
And I just want to add that maybe, Lori, there's a possibility that we may have a few folks coming in with 50,000 each. So we might end up making the whole 100,000. So, I think, we can kind of play it by ear, but I definitely see where you're coming from that, really we have 2 days to make some quick decisions here on such an excellent project. And, but I think that there is a possibility that we may be able to even potentially fill that small gap from, the two large investors. And we may come up with, I don't know, a couple of folks with 50,000 that will make up, I don't know, I'm just throwing it out, 200,000 or whatever. And you got, your big investors, and you might be could be fully funded by that point. So I think
I think that's a great point, Shelly. If there's a multiple people that are in that same boat, that's definitely something that we can consider.
Yeah, I think that's definitely an opportunity for us. But yeah, great question. And any other questions from anyone else on the call? Any last comments from both of you? I know we're right into almost the hour now. So any comments from both of you as, from our discussion today, anything that maybe I've missed? I thought I had a question, but I did. What is the cost to build per square footage? Do you happen to have that number nearby?
Yes, give me 1 second. So for all of the hard costs, it's $97 a square foot.
Okay. Got it.
Yeah. And I would note that that includes all of the common area extras and everything else that we've added in. So that's not just like the basic building.
Okay. Oh, good, good.
Yeah.
That's good.
Yeah.
That's very
No,
good.
the basic building is much closer to like 50-60 bucks
Okay.
a foot.
Got it.
Oh, and on that note as well, I know that one of the things that we're really happy with our design build contractor, just to close out that conversation, is that we were able to lock in all of our commodity pricing back in April and May. So we're not affected right now by all of the fluctuating prices in steel and lumber and all of those items. The only item that we have not locked in is the exterior fencing, the chain link fencing, because we don't need it yet. So we're waiting for that to come down a little bit more in the next couple of months and purchase that when we need it. But 2 of the 4 buildings steel is already on site. So we're not facing any of the supply chain delays or anything. Our contractor got way ahead of that. So we're very happy with that.
Phenomenal. That's awesome. Awesome. Any last words from you, Rob?
Yeah, thank you, Aaron, for mentioning the materials. That's a big question that we often get asked by investors, and thank you, Shelley. I would say, I want to reiterate that a lot of the challenges have been taken out of the project, and Aaron and the Warehouse Partners team and they've done a wonderful job of reducing risk and maximizing the investment and getting a good deal. And the municipality is very excited about this project. Aaron had mentioned that the governor's office came to our groundbreak, and they are very excited because they understand that there's not enough of this asset. A lot of investors, they may see it by the freeway, maybe some of the older assets and things like that with the roll-up doors and metal buildings, and they don't really think too much about them as investments. And that's really because nobody's really delivered anything new to the market in a long time. And if you're an apartment investor or self-storage or something like that, and you could imagine that all of the other investments that have been delivered in the 80s and 90s, maybe even in the 70s, and this would be the first new one in a long time. So we're able to push rents and deliver a project with low maintenance and superior materials, built well, right from the get-go, well designed by a team that understands the asset class. All of that to say is we're very excited about the project, and I think it's extremely conservative in its estimates. And I think once delivered and once leasing starts, I think everybody involved in the project, investors and stakeholders in the municipality, everybody was going to be really impressed with how it goes, and I think maybe surprised with how successful the investment could be.
Well, I'm very excited. I am very excited. I think for so many reasons, but for me, my excitement is that the project is local, and a lot of the projects that I've worked on, are typically out of California. So, it's exciting to have something local and to see it happen here. And so I think that is something that's, besides all the financials, dear to my heart, because it's something that benefits us locally, and it's something that I tell a lot of my investors that we can drive by, we can look at it, you can even be a tenant, and so, but it's something that's local, and I think that just brings a sense of comfort for a lot of investors that they're not just Googling a property that they have some ownership in Texas, but they can actually drive by and see how we're housing these businesses and how that business community is thriving in Madera. So I'm very excited about that. I want to close it with, I just really want to thank Rob and Aaron for being here. I truly appreciate your time and the short notice. I know there were so many questions and that I had and a lot of the other investors as well. And I appreciate you coming out during your holidays and spending time with your family and just addressing these questions, because I mean this is this is so real and so raw, and that's what I like when it comes to these type of investments, is like, you know, digging into that detail and truly understanding the scope of it. So I really appreciate that. I also want to appreciate Lori for your questions, all of our other investors that just logged in to listen in, and those that will be I'll be sharing the videos with. And you know, if you guys have any question, feel free to just reach out to me, and you know, we'll get connected with Rob and Aaron, and if we need to address anything else, we can as well. But with that, I would say thank you, everyone. Have a good, well, it's past Christmas, but I hope you all had a good Christmas. Looking forward to the new year and for the rest of the week, and be safe out there, and we'll stay in touch. And definitely, you know, the funding time frame is in 2 days, so we probably need to figure out how we're going to make that happen, but we'll coordinate via text and emails and phone calls on that. So, but thank you,
Great.
everyone. It was great to see everyone, and it was a great conversation. So once again, thank you, Rob and Aaron. So have a great week.
Thank you
Thank you
for hosting
guys.
us.
All right.
Thank
Bye.
you.
Happy
We'll talk
holidays.
to you soon. Bye bye.
Thank
you.
Bye.